All right, so there's a lot to be said by going live on YouTube versus Facebook. So, Natalia, how are you doing?
Doing great. I'm
Good.
glad you're on time.
Yeah, well, I'm not. It's not my vacation day, so
Mhm.
I'm glad you're on time. So let's get started and have a good time for everyone. Uh, First of all, I just want to say welcome. Everything that you learned today is really for educational purposes, and um, you know, I will say this that if you do make a lot of money with some of the things that you learned today, please remember me, when you get very rich.
And if you don't,
What's that?
if you don't get rich
If
from
you
your,
well, if you don't get rich, it's your fault because
oh, you
you're
see?
not paying careful attention.
Okay, got it.
So let's start with a few books that I want to recommend. These books are fairly easy to get a hold of. This is the first one. I don't know. You probably already have this book, but it's very easy reading, and the chapters are short, and it has several parts. Part one is wealth. Part two is money. Part three is enjoying what you have. Part four is getting more of what you want. Part five is balance. And this is definitely something that I've read and I've enjoyed reading. Um, the next one, which is the standard, is the industry, is The Intelligent Investor by Benjamin Graham. I don't know if any of you have read this, but this is basically the most important book ever written for investing. Everyone that went after Benjamin Graham, has read this, from Warren Buffett to William O'Neill. Everyone, this is the foundation of investing, and it shows pictures of stock charts and a lot of pictures in here, but most of it is very good knowledge, and very easy reading. And then last but not least, probably the most important book for trading and swing trading, day trading and swing trading, is Mastering the Trade by John Carter. Um, Proven techniques for you know making money in the stock market. And the book is broken down into different parts, and each part has advanced elements: psychology, markets, hardware and software, and opening gap, pivot points. Talks about pivot points. I talk about pivot points a lot. There's a whole chapter about that. Scalpers buys and scalper sells. It's really a great book and very easy reading. I'll say that if you read this book from cover to cover and you actually learn what's in this book, you're going to do very well in the stock market. So those are the three most important books that I have. Of course, William O'Neill's books are also very important. But yeah, so those are the three important books. So I want to say hi to Eli and Gia. Came a little bit later. Um, maybe Daniel will join us a little bit later as well. So I'm excited to um, share my screen with you and get going with some of this great stuff. Let me go to my pictures, and I'm going to click on investment meeting. see, what are we going to talk about? All right, so this is an interesting thing. I very rarely talk about this, but I'm going to talk about this today. I think it's important to understand this concept. Maybe this isn't the best picture. This is a better picture. Basically science and investing are very, very similar. When you push on a block, you see this is a picture of a woman who's pushing on a block. In order for the block to move, there has to be a reaction and opposite reaction. And they're static between the shoes and the floor and also the box. So stocks are very similar to that. The market has a action on its stock, it's pushing the stock, but the static of the stock is people not willing to pay a lot of money for it. And the force that you're seeing is basically the market force. So if you look at market forces as pushing something, heavy object on the floor, you'll understand what's going on a little better. One of the most important things that we've all seen, stocks go down and then bounce off the support level and then bounce up. So the ground in this case is support. The action is the price that goes down. And the reaction is that, this stock is very cheap. We really need to buy it at this price, which is support line. And very often the stock bounces off the support. I don't know if you remember Thursday of last week, but this is exactly what happened. The whole market jumped all the way down, bounced all the way down to support level, and then bounced right back up. Certainly Friday was an incredible day. So hopefully you didn't sell everything on Thursday. I did the opposite. I actually sold some of my bad stocks, but I bought a lot of stocks on Thursday at a discount. So again, this is the same thing. In order for a book to stay on the table, there's a force of the book and the reactive force of the table. And the same thing is true with stocks. The table is known as support. And the book, the weight of the book, is the market force trying to get the price of the stock down. And the force going up is the investors trying to get the price to go up because they want to buy stocks. So talking about cause and effect, we all learned this in school. Cause and effect, very, very important. There's many different kinds of cause and effect. I'm not going to get crazy about that. You all know what cause and effect is. But one of the types that we can look at is a domino effect. Does anybody know what the domino effect is?
Yes.
All right, could you describe it?
Well, when one domino falls, every other domino in a line falls.
Right. So when we look at stocks, let's say you got earnings of a certain stock like Tesla, and the earnings are down. Tesla's price goes down. What happens to all the other stocks in the same group?
Goes down.
It goes down. So it's a domino effect. You need one stock to go down. Everything else falls down in sequence. So that's the cause and effect, a domino effect, and that's very, very clear in the stock market. What's a perfect storm in the stock market in the real world? A perfect storm is when. Go ahead, Robert.
Sell off in all financial products, financial instruments, bonds, stocks, everything. Complete sell off.
So we experienced a perfect storm in March of last year when we had COVID pandemic and everything was closing. No matter what you bought, it always it went down. There was no domino effect. It was just a perfect storm. So how could you take advantage of the stock market during a perfect storm? With the knowledge that a perfect storm will not last forever. It's just temporary. So when you see the storm subsiding, that's when you buy stocks. And also it's true with, people actually go out and buy real estate in areas that are hit really hard by tornadoes. People abandon those areas and they sell their houses really dirt cheap. But little do they know that, another tornado is probably not going to come for like 10 years. And in the meantime, these people enjoy the luxury of these houses. What's a volcano and how does that relate?
Explosion of price.
Exactly. Overvalued. The price explodes. It goes through the roof. But what happens with volcanoes? It always comes right down and
In ashes. In ashes.
in ashes. Exactly. So if you're looking to buy volcanic stocks, you have to realize the best time to buy them is before they erupt and not while they're erupting. And how do you know that a stock is volcanic and that it's bubbling? By the volatility index. That's the number one way, and also to see that the volume is increasing. But the most exciting thing is that you have a long, flat curve, and it's flat. It's called a tight area. So you have a long, tight area. That means that the price is bubbling. It's getting ready to erupt. And when does it erupt? Right before earnings, right after earnings. And the simple cause and effect basically is if you do enough research and you study enough about a particular stock and sector and industry, and you buy it at a really cheap price, you're going to make money. This is my basic technique that I like to use. Very, very simple. Do a lot of research, look at the fundamentals, look at the technicals, get in at exactly the right price. Doesn't mean that I don't use the other types too, but this is the most conservative and the best. So we talked about dominoes, volcanoes, perfect storms, avalanche. What's an avalanche?
I'm not sure.
Avalanche is when you're skiing up a mountain or hiking up a mountain of snow, and you just drop a can on the snow, and the whole snow starts coming down, right down the mountain. And avalanche is something that is not really predictable, and it's very, very dangerous. And you never want to be on the bottom of an avalanche. You always want to be on top of an avalanche. So you never want to be, overbought during an avalanche. But anyway, with the stock market, the avalanche is very simple. It's when you hear someone saying, in a chat room somewhere that, you should, buy AMD stocks, and the stock goes all the way up to the top of the mountain and then it goes all the way down to the bottom. That's an avalanche. Couple other concepts, tension and compression. Does anybody know, or could you think of a case in which there's tension in the market and when there's compression in the market?
Tension, it's probably where it's resistance, and compression, it goes sideways.
All right, you could look at it that way. Tension in the market is when the price of the market is pulled out, like a stock is pulled out. So tension means that you have like a long holding pattern or a whole tight area. Compression is when the price goes suddenly up and suddenly down. So tension is always a better place to be because you have more of an opportunity to get the price that you want. But when it's compression, it's harder to get unless you're in tension first and then compression, and it goes back to tension. I don't know. So basically, this is an example of load, tensions on the bottom, compressions on the top. And this is very similar to a stock chart. When the stock goes down in price, right at the very, very bottom, you have a lot of tension for the price to go up, and you have compression for the price to go down. That's where there is that fight between compression and tension. And if tension wins, the price goes up. Compression wins, the price goes down. So there's this interesting, visualization. Another way of looking at compression is when you have your hands you hold together like this. Tension when you have your hands pulling apart. So with stocks, compression is when you have buyers and sellers that push the price way up, and tension is when you have buyers and sellers that push the price flat. You understand now what the difference?
Don't they call it now like a squeeze?
Exactly. A compression and squeeze is exactly the same thing. Exactly. Very good. So more compression, tension. And then there's shear, and there's bending, and there's torsion. These are all, basic stock concepts. Shear is when you push the price of the stock so far that it just, basically disintegrates and splits. That can happen when you have a stock split. Tension, we spoke about, compression. And bending is when you have the artificial bending of the price of stock. And torsion is like when you have a split in the price, or you have very bad earnings or very good earnings, or bad news or whatever, then you have a torsion in the price. So this is a tension profile, tension and release. So the most important thing for us as investors is to realize that when we are investing, we need to go in right before the tension, and then we sell right at the release. So whenever you see that squeeze and the price shoots up, you get in, and then when there's a release, you try to get out. Tension and release. I don't want to get into music too much, but this is also true in music. And the last thing I want to talk about, just an interesting concept, is confusion and clarity. One of the big problems with investing in stock is that stocks in the market, there's just too much confusion. So what we need is clarity. And these are some of the interesting quotes. I like this one. I'm not a surgeon, a scientist, a CEO, or a Nobel Prize winner. What I want in life is simple, honest, and humble. So clarity is very, very important. So hopefully we'll have some clarity. I love this quote too. And last, worrying works 90% of the things I worry about never happen. And this is great too. Life is actually a chessboard, and players opposites use time. If you hesitate before moving or neglect to move promptly, your men will be wiped off the board by time. Napoleon Hill, very important. And manage your worrying. Don't worry so much. All right, so in the last week, we had an extremely volatile week. And, just prices kept on going up and down, up and down, up and down. really crazy. This is actually a stock that was recommended by IBD and Market Smith and a couple of other search engines. Has anyone have any experience with this at all? So what this is basically is it's an ETF of the semiconductors. And you can see it's been going up and down, but lately it's been going up, which indicates that this semiconductor industry, or sector rather, is getting very much in demand again because of the shortage of chips. I don't mean potato chips, I mean semiconductor chips. But if you're not really that keen on investing in individual semiconductors and stocks like that, then you could just get into this index. It's SMH. And it's a very good, I like this particular one because it's not really that volatile and it's outpacing the S&P 500. The volume is pretty decent also. So SMH is a good one to look into. So this is a individual semiconductor stock, Integris, ENTG, a great stock to look into. It's not as expensive as a lot of these other stocks. Earnings are excellent. It's been positive earnings in all the quarters recently, and a very nice slope up. And one of the nice things about this, the composite rating is 96, which is great. SMR is A, and accumulation distribution is B minus. But if you look at the sales, it's been going up steadily every quarter, and the earnings per share has been going up pretty steadily every quarter as well. So if you're interested in a specific stock in the semiconductor industry, ENTG is good to look at. And she's going to tell me in 2 years that she made millions on this, I'm sure. Another one in the medical system equipment that just popped up today like crazy is InMode. It passed the $100 mark. So if you pass the $100 mark and it goes like this, pops up, it means that a lot of people were hoping that the $100 was going to be the ceiling, and it passed the ceiling, and that means that the ceiling now becomes a support.
So short covering.
Or short covering, yeah. Composite rating is 99. You can't really get any better than that. Earnings per share rating is 98. Everything looks great with this one. InMode, INMD. INMD. I've bought some of this as well. So anyway, the next thing I want to show you, and I think, I haven't really been talking about this too much lately, is how to do a custom scan and how to do a custom scan for volume profile. And I think this is important for you to know how to do this only because you might have a special study that you want to research or scan, and to know how to do think scripting is important. Well, anyway, the volume profile customizing has a line right through it, POC, and that's the key line that tells you where you should buy. It's called the point of control. Point of control, and it's right smack in the middle. And it really is very helpful to know where the point of control is. But more importantly, it's very helpful to know the fact is the price of the stock above or below the point of control. So this is how we figure that out. This is an example of a stock that I've been trading. And if you look at this particular price profile, the point of control is exactly at the price of the stock right now. All right, and if you don't learn anything else today, I want you to learn this. This is an actual trade. I bought this stock at $45.57. I bought quite a bit of it, you know, not too bad. I bought it right below the point of control. At this price, it went down, then went back up, went down, went back up. And right now it's kind of hovering around the point of control. Look at where my stop is. My stop is slightly above the price that I bought it. And the other important thing to realize is that the price of the stock has gone up and has gone down, and I haven't sold it because I am putting the stop below this particular high volume area. I know that this stock goes over here, and at this point it's very low volume. So I wouldn't want my stop to be above that point because I would get stopped out. And you can see right over here, that was today, I avoided getting stopped out of the stock. And then I was really pleased that I had this up arrow showing that the stock is going to go back up in price. So this is a very, very good example of trading a stock and not selling it. And by the way, I didn't sell it on Thursday either. If you look at, this is today, today is Monday, this is Friday, this is Thursday's action. Overnight, the stock went down. It actually went below my stop, but then it opened above my stop, and then it kept on going, kept on going, kept on going. And today went down a little bit. But needless to say, on Thursday and Friday, this stock kept my whole portfolio pretty much above water, you know, a little stock like this. Anyway, getting back to volume profile and adding a ThinkScript. This is a ThinkScript, and what we're doing right now is editing a ThinkScript. So the first thing that I figured was that the volume profile, the price of the volume profile is greater than the price of the volume profile after 5 days. So this is 5 days or 5 bars. Basically, this is just the standard volume profile. What that means is that as the volume profile rises from day to day, it means that, you know, the price of the stock rises as well. So I tried this, and I didn't like this because it didn't really give me anything. So let's see. I think I should turn off my little clicking thing. The other thing I looked at was the price at close is crossing above the volume profile point of control. You know, this is interesting because the price crosses above the point of control, and that should give me some great stocks, but that didn't work either. It wasn't that that helpful. So what I ended up doing was I went to ThinkScript Lounge on a website that they specialize in just ThinkScript, and I downloaded a ThinkScript, and I want to share that with you in 1 minute. I'm going to stop sharing so I can open up my my program.
What platform are you using?
Oh, this is Thinkorswim. Yeah, this is, I only use Thinkorswim.
Okay, me too. It doesn't look like a Thinkorswim.
Well, it is Thinkorswim, except it's in the scan tab, and then loading up the study. I'll show you what I did in 1 second. I'm just loading up Thinkorswim right now. So let's pause the YouTube. And let's see, we got Thinkorswim going. And okay, so I'm opening this up. Any questions about any of this so far, so that, you know, we don't get too crazy and you lose your questions?
I'm not sure what you're doing right now.
Oh boy.
Well, that's not a question. Do you have any specific questions?
Well, I open volume profile customizing, and you show like few pictures, and I just have one. So I
Right.
mean, when you do inputs, like when exactly you do inputs? I mean, if like I'm only one who doesn't understand, we can just move on because I don't wanna hold everybody, you know.
No, I mean, this could be a good refresher for everyone anyway. And you're not the only one. I think Nigel doesn't understand.
Oh boy.
I like to pick on Nigel. All right, so can you all see my Thinkorswim platform now?
Yes.
Yep.
Okay, so basically what we're doing right here is we're going on this particular scan, click on scan, right?
Okay.
And then once you're on scan, then this is a scan set that I have already established. So I'm going to go scan query. So click on scan query, load scan query. And these are like the most important scan queries. These are all available, you know, free, and you can get it. What I'm looking for right now is volume. I'm always looking for volume. And let's see if we can find market maker move stocks. That's a good one too. So what I'm going to do is I'm just going to create one. Okay, so here's my new scan query. And the first thing is stock. I don't really want that, so I'm going to X out of that, X out of this, X out of this. So I'm going to add a filter. So here I'm going to add a filter, and I'm going to add a study filter. So this is my study filter. It just comes with a standard study filter. I'm going to edit the study filter. So this is what I was showing you before. ADX crossover. I'm going to edit this, and I'm not going to do ADX crossover. I'm going to do study, look up the study, and I'm going to look up volume profile. Volume profile. So it comes up right here. All right, so this is what I was showing you before. The volume profile, it was a little bit bigger, had more things. Does that look familiar? So the idea here is that the volume profile, which is the POC, which is the point of control, which is that center line. What do you want to know with the center line? You want the price to be above or below, or does it not really matter? So this tells you, this gives you a value. This 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 is a value. So I'm concerned that it is greater than or is less than the price. I want the price, I want this to be greater than or equal to the price, because then I can get a good deal with the thing. So we have a few options here: open, close. It's always better to use open, and then you set the bars to, let's say you want 10 days or 15 days. Okay, so what I'm doing here is that line for the volume profile is greater than or equal to the price of the stock in 15 bars. So you click save, you click OK, and let's see, this is the scan query that we just created, and that's the new scan query. So what we can do now is we can run the scan. So it gives you an opportunity to run the scan and to see what happens. So, but I'm going to show you something else that I think is even more helpful. Let's say that you just want to scan inside your watch list. That's it. This is your watch list. It's my own personal watch list over here. This is the watch list. And I just want to scan within my watch list. That's all I'm really concerned about. And this is Cindy Scan. Cindy was one of the people that was in our group a couple of years ago. And I set up a scan just for her. So within my watch list, I want to know if a stock has dividend yield, what the percent change. It has to be positive. TTM scalper alert has to be low, and all these criteria. So then I hit scan, and I'm waiting for results. And basically, in maybe a minute or two, I'm going to get some stocks that meet this criteria. So these are all the stocks that meet these criteria. You could adjust this. You can make it a little bit more stringent. You can make it a little bit more lax. If you move this around, you're making it more strict. See, just by simply moving this around, sliding this over, you're going to get less stocks on here. And this tells you that the price of the stock had to go up at least 0.59%. And then you just look through this and you find the stock that you want, and then you can sort it by net change. And this is net change, but we're looking more for market value change. So you just go through this and you see what works. Unfortunately, this list doesn't correspond with the volume profile. This just corresponds with this particular set of requirements. So what we're going to do next is we're going to say, okay, this is all pretty great, but none of this is really useful for us right now. What we're concerned about is the volume profile. And what I'm going to do is I'm going to edit this. And I'm going to edit this, but I'm going to hit the ThinkScript editor, which is this editor. You see there's two tabs. There's the custom wizard and the ThinkScript. So in order to edit the ThinkScript, you have to delete all this. And here's the trick. This is where everything comes together. You go to the search, and let's go up here and we'll type in volume profile. Volume profile. Think script. Think script. Scan. Scanner. Okay, it's already been, they already figured this out. There's people that have done this. And so you go down there and you look for the volume profile. And this is the site that they have Think scripts. So you click on this. And here is a typical volume profile for what we're looking for. You can sign up for this. This is really good to be part of that. And you can see this is the Think script for each of the different things. But what I'm looking for is volume profile scanner. See, this is the scanner. So what I'm going to do is I'm going to set this up, shift and select and copy. So now I have what I'm looking for. So I'm going to plug that in over here, paste. So this is a script that will help me with the scanner. And someone already took the time to come up with this. I hit OK. And now I have this scan right here. And I'm going to scan my watch list. So this is going to tell me if the stocks that I'm looking for have, the price on that POC. So look at all the stocks I have over here and look what happens when I run the scan. I have much less stocks, much less noise to deal with. But each one of these stocks come from my watch list, and each one of these stocks are perfectly priced, within the volume profile. So what I do is I click on here and I save the scan, and I'm going to change this from Cindy scan to volume profile scan. And then I'm going to hit save. So this one already exists. Let me change this one to S, so we have two of them. Okay, so now we have the scan. And what I'm going to do is something really interesting. I'm going to go over here and we already have the scan, load scan. I could share it with you if you want, or I can go over here and I can open up the volume profile scan under my personal. I go to volume, STUV, right over here, volume profile scans. Okay, so in 1 minute, you're going to see the population. This is going to populate right over here on the side. Okay, and then when that finally populates, I'm going to be able to go to charts, and I'll show you how all this works. All right, so let's see. I guess we can be patient or we can be impatient. Let's try doing this again. Volume, profile scans. Yeah, sometimes the system has to update. If that doesn't work, I'm going to show you another thing you could do. Just click on the number 2, and it takes you to the chart, and then you could go to the chart. And you could see very, very clearly that the price of the stock is right at the POC, point of control, which is really where you want to buy the stock. So Broadcom which is, a great stock right now, is at a perfect buy point. Okay, so we can go back to the scan. We can go to the next one. Sony, go to charts, and Sony is exactly at the point of control. So this can save you a lot of time, a lot of money and aggravation by basically scanning and finding things that are at the right price. Cop Art, another great stock, is well, this one has definitely gone above, but I said from my scan it was the last 10 days, so that's why I picked that one up. I could change it and say the last 3 days. That will make a difference. A couple more examples. GPM, Guggenheim, go to chart, and again, this is an excellent example. It went down today right to that price. So this also works if you want to scan not your watch list, but you want to scan something more interesting, like an industry. Like, let's say you're into, I don't know, what's a good industry right now? Let's go to information technology. So you're all, now I'm going to go with software, and then I'm going to go with application software. So now I'm in application software. I want to find the stocks within that industry that are in perfect buy points. So now I'm going to scan, and let's see if anything comes up. And here we go. These are stocks that I don't even know about. And I would never know about if it wasn't for this scan. And we'll start with this one and go to the chart, and you can see, clearly that it's below the center line right here. We go to the next one, clock, and go to charts. And this one as well is right over here. So I thought that might be useful and helpful for you to at least get an idea of how to use it. Any questions about this? I'm going to go back to my personal and then go to my watch list. So basically, it's really important for you to have a good watch list and to scan, the watch list. So, if you can remember to do that, that would be great. So, Rob, anyone have any particular stocks you want me to look up and tell you what my thoughts are on those?
Sure. Let's check out ICE.
How do you spell that?
ICE, Intercontinental, was an Intercontinental.
Yeah, this looks pretty good, actually.
I got a couple.
Yeah, well, I'm not going to buy any more. I'm just going to write them down and buy them another time.
That's it. How about Checkpoint, CHKP? Charlie Hotel, King, Peter. Might be
No,
overbooked.
I like the first one much better. This one's way extended.
Yep. I'm not going to hog the time. I got one more, and that's it. NVTA, Nancy Victor, Tom Apple.
No, you're not hogging the time. If anyone has any, they can chime in. This one actually is in the process of going down. And even though, it's very tempting to buy it, it looks like it's got a lot of downward force.
Yeah, it just did. The 200 just crossed over the 50.
That's true too, yeah. Yeah.
I've had it for a while. I haven't bought it. I should have sold it when it was up, but I think that was my mistake.
Well, my stop on this, by the way, you have this yellow line and this yellow line. Normally, if you follow this trading strategy, this yellow line means to be very cautious, and this green line means you should be selling, and over here you should be selling. So, and because the gap between the center line and the lower line so wide, it means that there's more of a downward force on it.
Oh wow. Okay.
So that's how you read that.
Okay.
So give me a couple more, Rob, and then we'll go to somebody else.
I looked at Cisco, SCCO. I think that looks these legacy tech companies. They're starting to come back.
What is it? SCCO?
Cisco, SCCO. Charlie Sam, Charlie Oscar.
You mean C?
Yeah, Charlie. Yeah.
You said SCCO. Okay.
Oh, sorry, Charlie Sam, Charlie Oscar.
Yeah, Cisco.
Yep.
Oh, this is great. This is very, very nice.
Yeah.
Yeah, and Cisco is also a very good, stock because it gives you good dividends, right?
Yep. And Micron looks cheap. MU.
Yeah, let's take a look at that. MU. Yeah, yeah. Except I don't like this because it's on the way down. Cisco looks a lot better. So I wrote down ICE and Cisco, those two. I have a couple of different ones on my list also. I don't know if you remember.
Bill, just a quick question.
Go ahead. Go ahead.
The one that you just showed of Cisco. I'm sorry.
Yeah.
On Cisco, it showed that it hit a bottom and it was going up, but you say that it's going down. You're saying it because of the lines, that graph that you use.
Yes.
Go back to Cisco.
No, I said Cisco is going up. I didn't say it's going down.
Was that the one?
No,
Well, for some reason it just showed.
the one. That was the that's a good one. There was one right before that. I forgot the ticker symbol. Rob, what was the one right before that?
I think we were looking at NVTA.
Go ahead. Could you spell that again?
You got November Victor Tango Alpha. Oh. Yep.
Yeah, you see, Eli, this one's going down.
Okay. Thanks.
Now this could be a short-term correction, but if you pull this from a 4-hour, 15-day, or you change it to a 3-month daily. 3-month daily, it looks like it's going up, but a 4-hour, 15-day, it looks like it's going down. So it's a question of whether you're a long-term or short-term trader. But if you're a long-term trader, this is a great one. NVTA is great. But if you're looking to get in and get out on the short term, probably not the best. Let's see, 30-day, 4 hours. You can see what a big difference it is, right?
Right.
So, if you put this on a 1 year, 1 day chart, you can see that the volatility is incredible on this. It goes from like 60 down to 25, but it looks like, it's going up, from a 1 year. So, but the thing that gets me concerned is that the TTM squeeze is going down. The volume, this is another thing that I found on Thinkorswim that I really like. It's the accumulation distribution, study. And what's really cool about it is it tells you the amount of volume for accumulation versus the amount of volume for distribution. So what this indicates to me is that the volume for accumulation is much, much, much greater than the volume for distribution. So what that means is you got a few people that are trying to sell, but you got loads and loads of people that are trying to buy. And unfortunately, and this is the weird thing about stocks, and it's definitely not a good thing, but it's definitely true, that when you have a very few people, like right over here, that are trying to sell, the people that are trying to buy are staying away. And why is that happening? Does anybody have any idea why that's happening?
It's tension happening.
Tension is happening, yes. But more importantly, if you look at spots like this, you have such few people, trying to sell. Very few people trying to sell, but all these people trying to buy in between. And that is because every time the price dips, you get more and more buyers. Every time the price dips, you get more and more buyers. Price dips, you get more and more buyers. So you have this dance between a midget and a very tall person, and the midget is taking, 10 steps and the tall person is taking 2 steps. It's very interesting. And if you observe this particular pattern among stocks, you'll start to see that it's true with almost every stock.
Could be
You know what's
institutional
also
value.
interesting? That if this was mostly yellow or orange and very, very few white, the price of the stock would go from like 60 down to 0. So you need buyers to make the stock work. So that's interesting. But let's look at ICE and see how that pattern is different. You can see with ICE, it's similar accumulation distribution, but much higher accumulation than distribution. And this one's definitely going up. So ICE, even if you look at the 1 year, it's pretty close to the buy point in terms of the volume. This is a much better stock to look into. And Cisco, yeah, it's one of my personal favorites too. Yeah, it's right at the perfect buy point right now. Absolutely awesome. And what's interesting about Cisco is look at the accumulation distribution. Very little distribution. Very, very little, almost none. People are just buying. And this is a nice type pattern. So very good choice. Cisco Systems. One other thing I want to point out, if you go to analysis and on Thinkorswim, you get to see all the wonderful things about Cisco. You can even, for certain stocks, company profile even tells you the price of the stock versus the current. So Travis estimate of the price is at $53.56, and the price is at $53.23. So even according to Travis, you are in a good, good place right now if you buy this. All right. So, and even the street, which I like very much, is saying that it's a buy. CFRA has it with 4 stars. And the street is actually very reliable. You can download that right off the website and tells you exactly why you should buy this. Not too shabby for free, right? All right, so that's it for that. Any other stocks you want me to put up here and go over?
I'm good.
How about you, Nigel? You always have something interesting. Nigel probably went to the bathroom.
No, I just stepped away for a second also. Yeah, nothing really interesting. Just being vigilant, that's all basically.
How about you, Natalia? Anything you want me to look at?
Well,
Nothing? Okay.
I mean, if you want to look at this stock today, went almost down 20%. Space, SPCE.
Virgin Galactic. Yeah. That was something I was trading before.
No, I want you to see the chart.
Yeah. It
So
went down 17%.
it's related to Branson going to space this week.
But people realize that you're not going to pay $250,000 to get in an airplane to go up for an hour. That's insane.
No, it's actually not. It wasn't the reason why it went down. The reason for going down was that the company wants to initiate another 500 million stock extra.
Okay.
So they basically diluted the stock price by issuing extra shares.
Oh, okay. All right. That's good to know. That's very helpful. By the way, there's a tab right here, live news, and it tells you why this Virgin remains bearish. It tells you all about everything.
Well, this morning it was up actually from Friday, but then when this news hit about additional stock, then the stock went down.
But you know what's really interesting, Natalia, is that the price of the stock went down pretty much to the $45 mark, which is where it really should be. So if you use the volume profile and you buy the stock, you wouldn't have bought it for more than $45. So it's very, very helpful to know that. So right now, this stock is actually a bargain. Whether or not you believe that having more shares will make the price go down or not, it's still a bargain right now. But what would be really interesting is if this price went down to like $35, because of that, and then you should definitely buy it at 35 for sure.
I think it might go down if market pull back.
It might, yes. Yeah. All right, great. So that's a very good stock. Very good stock. And Jeff Bezos apparently is going up to the moon next week, right? Or in a couple weeks.
Oh,
And
a lot of entertainment.
People are hoping that he stays up in the moon, but that's mostly his
Yeah, a lot
exploit.
of people think so.
Yeah.
That's it. Ralph is sending him to the moon.
Yeah, well, I don't hope anything bad would happen for him because if it wasn't for him, I wouldn't have like half the stuff in my house.
William, what do you have about? I mean, what do you think about NVIDIA?
NVIDIA, yeah, I mean, I'm a big fan of NVIDIA. I've always been a big fan of NVIDIA. It's great stock. You know, right now it's kind of going in a downward pattern. So I would say at maybe $800, it might be a good price. And if you can get it at slightly below $800, maybe like $790, you know, you would be in good shape for sure. If you want, you know, I'll bring it out to a 3-month, 1 day. Well, it's definitely overextended. Yeah, but $800, I think, is going to be the next pivot. Yeah, next.
They have a split coming up.
I'm sorry?
They have stock split coming up soon.
Oh, really? Okay. That's good to know.
4-to-1.
Really?
It's right on the chart. If you see below the.
Yeah, I see it right here. Yeah. So what does that mean in terms of investing? It's coming up on 720. Should you buy before the split or after the split? That's the question.
That is the question of the day. In my mind, I would wait after the split because I think you have to have been in it before the 21st of last month in order to get the shares. If I'm correct, I'm not sure. But,
Oh no, you can buy it up to the split and get the price.
oh, get out! I didn't know that. I thought you had to have been in before a certain date in order to be eligible for the shares to the 4-to-1. Wow. Okay, guess I was wrong.
That's like for the dividends.
Okay, I got you. Thanks,
Yeah.
Bob.
No problem.
No, but my experience has always been if you're in it before the split, you make a lot more money because more people buy it after the split because they're looking at it like, oh, it's only $200 a share. I can afford it. So yeah,
That's what I did. Bill, that's what I did with Apple. It's funny, I did not buy it at 200, 300, 400, but when I got to 500, the split was coming up. I bought in, and it took all this time to make a little money. So I
really?
did buy it right before the split, thinking that it would react that way. Well, again, if I paid 125 and it's barely 130 something now. So it didn't work with Apple, but
Well, Apple's not NVIDIA. And NVIDIA is one of the hottest stocks in the stock market. Apple's not really the same.
One thing from a corporate finance point of view, when they split the stock, what they're going to dilute is earnings because it's more shares. So that's a negative. And then sometimes what a corporation will do is when you split the stock, you're gonna increase treasuries. So you might want to take a look at NVIDIA and who they might take out. I think that's where you can make your money with the stock split. Because usually they'll do that a lot too. They'll split the stock and then they'll go out there, buy companies, and they'll buy it through stock acquisition. They're like, all right, we'll give you X amount of shares of NVIDIA. So that might be a way to play the splits.
Mm.
Yeah, could be you know, acquisition. And once you have an acquisition, the stock that NVIDIA is buying is the one that's going to go up.
Yep. Yeah, you just got to figure out when if you really, you got to dive into the details of NVIDIA and see where who's getting taken out. I mean, you really got to do a lot of homework and reading for that. But that's the way. Yeah, stock splits usually are not. Usually the stock goes flat after it splits.
Yeah.
That's what I always seen.
Yeah.
Yep.
So according to your understanding, you're better off buying before or after the split.
Stay away from the company completely.
Okay.
That's what I would do. Yeah, it's a very conservative move to split the stock. So if they're getting more conservative, maybe they're seeing a slowdown in their business. So they figure, hey, let's split the stock. That way we could, if we need to do an acquisition, we have it, or maybe even compensation on the executive end. They could offer a lot of stock options. That's another way for them to increase that. Maybe they want to hold on to management. Maybe, I don't know enough about the company to tell you what's going to happen. I don't know. I don't have a crystal ball, but that's one way to hypothetically look at it, or hypothesis, whatever you want to call it. Yeah, I mean that's why you got to research the stock splits. Why a company would do it. I remember Pfizer split, and then you got to be careful, the guys on CNBC, because I remember one time Pfizer split, and the guy's like, yeah, buy the stock because a lot of companies don't want to hold on to so many shares of the same stock, but that doesn't make sense because you still hold on to the same percentage. I mean, $1,000 split by 20 or $1,000, 1,000 shares, whatever the price is, you still have $1,000 worth of stock or $100,000 worth of the stock. So a lot of guys try to fake you into